Welcome to ATFX Global Markets here in Sydney, Australia, and we'll do our Australian CPI preview today. Now, we're a day ahead, 24 hours ahead of when or 24 hours and about 15 minutes out of when we get the CPI announcement. Now, very, very key for Australian markets and for the Australian dollar. The RBA, as we know, held rates steady last week and came out still hawkish. And they've come out hawkish because inflation is so sticky here in Australia. Now, we're expecting inflation on the year-on-year number to actually click up, which is obviously not what the RBA wants to see and not what most householders in Australia want to see. We're expecting it to click up to 3.8% on a year-on-year from 3.6%. Which is still relatively high against most of the other central banks. And now with futures markets, we're pricing in the RBA probably being the last of the G10 central banks to look to cut rates this year. And to be honest, it's probably not going to happen this year. I think at the moment, the odds are on a February cut from the RBA. So what I'm going to do is bring you over to the Australian dollar charts, see what potential movements we can see in the Aussie tomorrow. In all likelihood, we're probably going to see some fairly moribund moves today. It's still range bound. It's still from the last update that we gave you. We're still kind of sitting in the middle of this recent range that has really been covered by 67 cents on the top side and pretty much 67 on the downside. So here we've got the longer term chart. And as you can see, I've just been talking about those ranges. Here's that range for like pretty much for most of the year. That's 67. This is sort of 67 topping out here, and obviously a little bit lower earlier in the year when we got down just underneath 64 cents. But for the last couple of months, we've been really stuck into this tight range on the daily charts, and I think what a lot of traders are hoping for is a bit of volatility, a bit of a move from the central bank. But really, because we're looking at the Aussie against the dollar here, we're seeing this range-bound conditions, interest rate differentials between the Aussie and the dollar. They're not really moving too much because we've got a fairly resilient Fed in the US, and we've got a fairly resilient sort of sticky inflation situation here in Australia. So that's why we're seeing these range-bound conditions. And this is a much better view of what I was talking about. So you can see these highs coming in here, just around 67 cents, and the lows. It's a little bit low. It's a 66, but really, like if you were trading a 66.50 option for the last couple of months, you'd be making an absolute bomb. So here we are sitting mid-range at the moment. We don't really expect to see it break out of these ranges before tomorrow's CPI. There's not really any massive US data out tonight either. So as both pairs of the equation, there's not probably going to be too much to move it at the moment, unless, and there is that threat of intervention coming in Japan. You will see a little bit of movement there, but it's likely to move the crosses. So expectations, as I said, expectations coming in at 3.8% for the year on year, and that is 0.2% higher than it was for the April print. So keeping an eye on that. Anywhere, if it comes in around 4%, expect the Aussie to move and break through these recent highs, and we probably could break into another fresh range. Anything lower, and I think there's a lot of people, particularly here in Australia, that are looking for that. There is that cost of living crisis is still very relevant here, and you're starting to see a split. Anything lower, we should come down to challenge these recent lows, like 66.13, then the lows here just around 65.80, and it could break through to into another range. Obviously, on the back of the caveat we have to look at when we're trading this Aussie dollar pair, we have got PCE data out of the US on Friday. So even though we could see some decent moves off this CPI, expect it to be relatively short-lived, 3 or 4 sessions before traders then start to pull back and see that expectation on what happens from that key Fed inflation data on Friday. Obviously, what a lot of people looking for trends will be hoping for is we get a double whammy. So we either get a more hawkish number, a stronger CPI, and a weaker PCE number out of the US. That could see the Aussie really break up and probably look to hit these 68 cents levels and even higher. Conversely, we could see that number coming a lot lower. Rate cut expectations really come back in Australia. And if that combines with a strong PCE print, then we're going to see this new range click in here in the Aussie. So awesome trading opportunity. For the short term, anything 0.2, 0.3 away from that 3.8 expectation, expect to see decent moves, particularly in this session tomorrow and into the European session. What we really want from a trend point of view is to see those two, the US and the Aussie data, conflicting, and then we can see it break into a fresh range. So good luck trading out there. Thanks very much.